Hello guys, in this video I'll show you how apparel production in this company is organized in Odoo. But before we go into the flow of data entry and such, it's important to note that there's a couple of setup to be in place so that things run smoothly. First of all, it's related to locations, I mean inventory locations. If we go into inventory and look at locations, you would see a couple different locations, but it's important to note that we only have these major warehouses. So the second one down here is a consignment warehouse, and the one up here is our internal warehouse. It is critical to separate these two warehouses, like our warehouse and the consignment warehouse, as two separate warehouses. Instead of, for example, inside WH stock, you create several smaller locations for consignment purposes. For example, WH stock, if you put consignment locations as a sublocation of the warehouse stock, that would affect our inventory calculation. Think about it. When inventory are being under consignment, they are at the supermarkets, so we can't really touch them. The supermarkets, the customers, are in charge of them. They may return those products to us if they think that, yeah, they are selling slowly, but we can't really tap on them. Let's say we need those inventory, we can't really tap into it and use it for our purposes. Think of it this way. This is how it works for inventory calculation in manufacturing. You have inventory on hand, for example, is 10, is real-time opening balance. You have a purchase order of 5, is on the way, is coming. You are producing 4, so inventory being supplied is 9. And then you are committed to 30 units at sales forecast, and you already received a sales order for 20. A formula could tell that, all right, inventory available is minus 31 because you are committed to too many. A recommendation here might be, produce more or buy more so that you get 31 on the way, and this would go down to 0. Or if you want a buffer inventory level, it might be a bigger number so that you have a minimum inventory value of 19, for example. All this calculation, all right, should be related to our warehouse, WH stock. Okay, you can't really say, I have inventory. So for example, WH stock is what we have, and then we have things coming, and it's all related to our internal warehouse. Any inventory that has to do with consignment doesn't have anything to do with our manufacturing and inventory calculation and MRP recommendation as mentioned up here. So they have to be separate. See? A side note is this one. The location work in progress defective. This is a quarantine abstract location in which products that are pending our decisions are placed in here. Quality control found out that some products need to be considered for fixing or maybe dumping. We don't know what to do with it yet. We quarantine it here, and as you can see, is located in WH. So it might affect our calculation when it comes to MRP recommendation, but it's not significant. So there you go. Now, with that in mind, we now turn our attention to inventory. So let's take a look at manufacturing. We want to see bill of materials. The example that I'll walk you through is this product. Reference. Sorted from, A, C, D. Sewing for finishing for sales. There's no B here because this product doesn't require washing. Now you have three major products, one work in progress, another work in progress, and then the final one ready for sales. The first one, you manufacture it. And here's the manufacturing BOM. It contains the main fabric and the lining. The next BOM is a subcontracting one, which is set up this way. See, BOM type, subcontracting, and who are the subcontractors? These ones. And it's usually the one that's on top of the list, this one, that will be automatically generated in purchase orders. And as you can see, the output from the previous stage is here in this BOM, you see. So to recap, you see in this one, you are producing something that's ready for sewing. And then in this BOM, you are producing something for finishing, which means you are consuming something that's ready for sewing together with all the accessories related to the activity of sewing. As you can see, drawstring and etc. Then you got the last BOM. You manufacture this one, all right? No subcontracting here. And similarly, you consume the product, the work in progress, ready for finishing, which is the output of the previous stage. And you also consume these accessories that is used in the final step, finishing, in order to produce this one, the very final product ready for sales. Now, it's important to take a look at each of these work in progress products and also the material to see how they are configured. Let's look at the first one, the one that's ready for sewing. I'm going to show you here. We go into inventory, look at products. It's going to be group by category. Alright, so we're going to go from left to right, only until this point. First one, the one that's ready for sewing. What do we have in here? What I want you to note is, first of all, get the internal reference like this for easy searching. Don't care about the sales price, but what's important here is this cost is 25,000 something over here, and you see that this cost will go up later on as we go through more production stages. Customer taxes doesn't really matter for this one. We are manufacturing this product by ourselves. It's not subcontracted, so there's nothing here. We don't buy them either, like buy them outright. So here you go. This is important. In routes, make sure you tick manufacture and also make sure that you tick resupply subcontractor on order. Why? Because the next stage after this product would be used in this bill of material and is a subcontracting bill of material. So you want to resupply the subcontractor with this so that they can do their job in the next step. And also for the system to work automatically, make sure you have this in place. Reordering rules, you have a line like this, multiple quantity of one, just one, and things would work perfectly. Also, please leave on the lead time as 0 so that any document or voucher or operation would be triggered straight away. If you're new to the system, it might be confusing. You don't see things being triggered because these lead times are in place. Anything else? Putaway rule? Not really. Okay. So that was the first work in progress product. We want to go back here and look at the next product, work in progress for finishing. As you can see, this cost is now 36,000, is a bit higher. It was input in here based on past data and experience as the beginning balance. for this product MasterCard. Anyway, say internal reference for finishing, make sure it's in place. Similar to the other one. This one you got. Alright, so this is important. These guys would be ticked as subcontractors instead of normal vendors. It's like, you're subcontracting things to them, you're not buying things directly from them, because in this bill of material, and over here, this box is unticked because the next stage, what is it used in? It's used in this and it's manufacture this product. So think forward, guys. In the next stage is an internal production team that does the job. It's not subcontracted. So you are not resupplying this thing to any subcontractor, basically. By the way, remember to keep these as 0 to make life easier so that you don't get confused. In reality, you may want to put some days in here, but if it's the first time you do it, you want to see things triggered straight away, make sure these are 0. These should be 0 too. Let's see what else. Min max, yes, make sure there is a line right here with multiple of 1 at least. Then you got cost analysis, put away rule, anything. Oh yes, there is put away rule for this one. So this product belongs to this product category, work in progress for finishing. See, for finishing, typically the subcontractor would return this product to this location, which is an umbrella location for smaller locations. I want it to go straight to this place, work in progress, finish, and QC, because that is exactly where it's going to be processed. It's going to be finished and QC and packaged. So let's get back to this. Okay, 25,036, 238. So let's go in here and take a tour. So there you go. Internal reference, no more suffix. The price is now higher. So this is the unit cost. Okay. Category, variant, sales, purchase. No, you produce this one. Inventory, see, you manufacture it by your finishing team. You want to see the diagram if you want to. And again, reordering rule, make sure you have this. It's not used in any other bill of material. It's got a bill of material to produce it, and we already saw it. Back to this product, unit sold. Okay. So now back to the bill of material. What I just showed you is the setup for work in progress products only. But remember, we don't just have work in progress products like something like these, but we also have material and accessory to be consumed along the way. Say, for example, the first BOM, this one, we are not just talking about the outputs, which is this one, obviously. We are talking about these inputs. So make sure you have the right input for these products. So let me take a look at this one. What do I have here? A couple things to note. You got internal reference, product category, storable products. Okay. Don't pay attention to this and this. You're buying this, so what matters is the cost right here per meters. All right. You don't really sell this. Purchase. Here you go. It's the price that you buy directly from this vendor, and it's not subcontracted for sure. You typically have tax with this vendor, so make sure you have it in place so that things are generated automatically. You wouldn't have to fix things manually in your purchase vouchers. Make life easy. Delivery lead time, keep it 0 if you want. purchase vouchers to be triggered automatically. You don't have to do things manually, and routes, buy it. Obviously, we're buying this. Also, pay attention. Nothing is here. Fair enough. And then bill of material. You're not producing this, and you're not getting this produced by subcontracting production anyway. You buy it outright. Just as simple as that. So nothing is in here. What's next? Used in. Well, yes, this is in the stage of cutting, and the output for this is something like a work in progress that's ready for sewing. So it's used in this. Beautiful. Putaway rules. You want to keep things tidy, so it belongs to this category. You want the product arrives in stock, it would go straight to this sublocation material. That's how it is. Let's see what else. Use the input away rules. So back to the build material. We have something else down here, and the setup should be similar, except that you would want to stay convenient when you should. Like, there's no vendor tax right here because we typically buy this from vendors who don't issue tax invoices. This guy. So make sure you have this thing removed so that your life is made easier when it comes to data entry. Other things would be similar. This one is used in many products. Well, yes, in many build material. It's linings, reordering rule. No, we wouldn't want to automate that. Put away rules. Similarly, it's lining and it goes to that location material. Any other things? No. That was the first build material. Now for the second one, the subcontracting one, you've got these. And it should be similar to what we saw before. It's basically something that you buy outright, direct purchase for use in some build material. So I'll just show you one of these, but pay attention. The location, the default location for these would be different from the ones that we saw before. So let's say I'll show you this one. See what we have. Cost, kilogram. So this is accessory for sewing. Okay. Okay, you buy it directly from this guy, no tax. And here, see? There's a difference here. For material and lining, generally major material that sits in the location material, we consume them ourselves. We don't resupply them to any other parties, any other vendors to consume them. But this one, in the next step, is used in, see? Essentially, it is used by the sewer. For the first one, it's used by the sewer to produce something that's ready for finishing. For the second one, it's used by the sewer to produce something that's ready for washing, because there's washing for the second product, which is why you have this resupply subcontractor on order. So the difference is this is going to be consumed by the subcontractor. You need to resupply them. Material that is going to be consumed by us. No, we don't really resupply anybody. Anything else? Reordering rule. Not really. Let's keep it manual. Build of material. No, you buy it outright. So used in many build of material. Puts away rule. There, this is the difference. Unlike material for cutting stage, that is to produce something ready for sewing. For accessory used for sewing, when it arrives from the vendor, we put it to this location, accessory sewing, okay, to keep things separate. I'm going to go back to this. So this one. These may have very similar or even the same setup. Let's take a look quickly. Okay, sales, purchase. Okay, this guy got tax. Again, buy it and resupply the subcontracting sewer. Alright, you already know. Bill of material used in, okay. Used in producing products that's ready for finishing or products that's ready for washing, depending on whether washing is a stage involved. Now take a look at the last one, the finished product ready for sales. You gotta consume this one, and you have to consume these accessories as well. And as you are familiar with accessories and material now, you may be able to set things up yourself and guess what the setup would look like then. Okay, product category, accessory for sewing, the cost, all right, the internal reference. Yeah, you buy it directly from this vendor, no tax for this vendor, straightforward. And you buy it, and you are not resupplying it to any subcontractor because, well, this thing is used by the internal finishing team, so we consume it. We're not going to resupply it to anybody. And what? Reordering rule? No. Bill of material? No, you buy it. Used in? Well, used in all these bomb to produce something that's ready for sales. You manufacture it. Putaway rule, here the difference is here. You buy it from the vendors, it goes into stock, that's the default location of Odoo, and you want to put it to this sublocation, which is where it's going to be consumed by the finishing team. You know what? I understand that whenever you have a new product, you have to set up many bill of materials and many product codes and even many setup, like should I tick on buy or manufacture? Should I tick on resupply? And should I put tax here? And who's the major vendor? What's the price for each vendor? I mean, there is a way to summarize things so that all the flow of these setup is in place and we don't miss things out. That is this table. Okay. It goes, our product is here. Down here is a different example because I want to bring washing into the picture. It's the same. You start with the stage of cutting and you consume this input, location. This is important for put-away rules. And then you got the output, which is the internal reference, the cost. All right, 100% because we buy this outright. If we are producing a work in progress like this, it's only 70% of the total cost, for example. And then you get this one, and it's going to be go up to 93%, 1793, and then 100 later. But yeah, delivery lead time, vendor tax, manufacturer, the typical setup to take a look. So this is a quick reference when you start creating something new, a new product with new bill of materials and new setup. Quick reference to it is here. Right, so let me show you a big picture overview of our put away rule to recap. We want to go into inventory, look at put away rules. See, so my put away rules are in line with product category and in line with the flow of production that you saw just before. Material, go here, go here. This category goes here and go to this location. So product category and locations go hand in hand. And I have to remind you this. We covered this before if you watched another video on master data and configuration data setup. But anyway, this product category has accounting implications in it. They call it account determination. What I mean is you want the accounting journals to go correctly, and it's going to be set up by product category. Let's go into product categories and see. Take a look at the major product categories involved in our production flow so far. This one, average cost. Here you go, 3388, 1541, and so on and so forth. The detail about each of these product categories accounting setup is in the video about master data. You may want to take a look at that. For now, I'll just quickly show you the screen, and then I'll give you a summary. Was that too fast? And then landed cost. Yes. The point about that is this. All right. So take a look. Material, you buy it, you receive it, it goes to valuation account. 152 debit object is the material. Stock input account is 3388. And then you receive the vendor bill. This is a simple process, but then, okay, production comes in. But this is similar. You buy material, you buy accessories, similar accounting treatments. It's basically begin with receipt material and then vendor bill. Now, you produce a first product ready for sewing. It is a manufacturing order, consume material. Stock output account is 1541. And then valuation account is the material is credited. It means you're consuming material. It goes down. Then you got landed cost, labor, 6237, trade payable. Well, you are cutting the material to produce this, so it's salary payable 3341. All right. If it's landed cost but outside outsourced service, it's going to be 331. A real trade payable. This is salary payable. Should be salary. So you're treating your internal team as though they were a vendor. But those vendor bills are not really for tax purposes. They are treated differently with 3341. So they are not the real vendor bill that has a tax invoice on it, tax invoice number on it. Anyway, keep moving. Landed cost matching. Yeah, when in Odoo you see later on when you match landed cost, things would go like this with debit and credit. Okay. The moral of the story is 152 valuation account of the product that you produce here, the output, is now 100,000 because what 80,000 was moved from material, 10,000, that's each of the services provided by the internal team and the outsourced vendor. In total, you got 100,000 of value in your inventory as work in progress. And that similar story goes, you got 100,000 now is right here, now is consumed in order to produce something else that is 140,000. This is a new output. In the next stage, you're producing something that's ready for finishing. You got 100,000 value from the previous step plus some accessory 10,000 and some service. Oh, so subcontracting, purchase order. So here you go. Stock output account of this accessory and this work in progress is the same. It's treated in the same way so that you get 10,000 and 30,000 from accessory, consumption, and landed cost. To get 140,000. That same story goes for the last step, producing something that's ready for selling. You moved this value of 140,000 from the previous step, and you are adding more value here. Consume accessories, so stock output account was set up so that you would bring over 10,000. Then you got landed cost, labor. All right, it's the finishing team, so it's landed cost right here. And then you got 150,000. Finally, you sell the product. Cost of goods sold is going to be 632. And let's say you sell it for 200,000. There you go. And as you can see, this one and this one are more similar because they have landed cost matching. All right. Well, here it goes more automatic. You don't have to do the matching step. So this was an example for you. Strictly speaking, this product code ABKKS would require washing. So it's not a good example right here. It should be our example that doesn't require washing. But anyway, you get the point. You want to add washing into the picture, then you get to this setup. Okay, it's just a similar story. You have all such accounting setup so that the value is added to the very end. So with all such setup in place, now it's time to take a look at a real life example. Let's say that this fabric cut table 3728 for this product code, and it was on this date. First of all, I'll show you what you have to do to prepare for the whole thing, and then how you go about everyday data entry when you execute it. And then finally, I'll show you the journal items. So take a look. Here we go. So guys, once you have a fabric cut table to produce 3936 units of final products ready for selling, you have to create this this MO manufacturing order. You are producing this product for selling. See? It's important to go into this tab, miscellaneous, and make sure the components location is this one. Okay? And the source, here you can write the note, make sure you have the word selling in here. Things could get really messy later on when you look at the overview of manufacturing orders if you don't have such a source like this in this format. And as you can see, we are going from the end to the beginning of the production flow when it comes to Odoo data entry. We create this MO for the final product first, and then it would trigger other purchase orders for subcontractors or manufacturing orders upstream to the level where you trigger demand for raw material. So we're going backward. And this is the first tab, components. You have other things available, but this work in progress, ready for finishing, is not available. And an RFQ is going to be created. You want to read this, and again, it's about the setup so that you don't get inconvenience. Next, this is a quick look at the work in progress that we saw on the first screen. This one not available, and I told you many of these before. You can read them by yourself. Basically, it means we're going to purchase this from subcontractor, and this is going to be this first one on the list. And there you go, a request for quotation or purchase requisition, or whatever you want to call it, was created automatically for this subcontractor. And the note here tells you that this one is automatically created instead of showing up on the replenishment screen with some order once button to the right. It's talking about the screenshot down here. So here you see in inventory, if you go into replenishment, you may see order once. You click this button and an order would be triggered, either purchase order or manufacturing order. But in this case, you automatically have a request for quotation. You don't have to go into replenishment and click on any button. That's what the note is about. If you open the request for quotation, this is what you see. And again, it's very important to have a note like this with the word finishing. I tell you here, later on, the overview of transfer voucher list can look very confusing. So make sure you have your own note writing protocol. Once you confirm this one, an in picking for the output of this purchase order work in progress finishing is created. Basically, it means, okay, you're buying it, so the goods receipt from this purchase, the goods receipt voucher itself would be created, and at the same time, an out picking it to resupply this vendor, this subcontractor, with the required input, and which means work in progress sewing and other accessories is also created. See, that's the beauty of automatic setup. And this is what I mean. Look at the transfer overview. Is it a mess? Look at the reference. Oh my God, all of the codes here. But it's easier for me to look at the notes like here, in my own way of writing. And what we just done, what we just did is this one, POO purchase order 232. We're talking about this. It triggered an in a goods receipt from this guy, and it also triggered the one up here, an out, and it's related. You see, 142 is related to this in picking. So you got to resupply this subcontractor with some work in progress ready for sewing. If you were to think of receiving any work in progress for finishing from this vendor, and then you can read my notes right here. Next, see, it looks better now. I see right away which output each transfer voucher relates to. I look at this, I see straight away this, they are talking about something that's for sewing in this voucher. This is something for finishing. Yeah. Make life easier. Replenishment. Our focus now is this out picking 702. That is this one on the previous screen. Okay, if we open it up, there you go. You got two items unavailable. And it looks like drawstring doesn't have reordering rule set up, so you don't see it in the replenishment list of inventory. However, for work in progress ready for sewing, now there is an order once button right here, and take a look. It's all related to our internal default location, WH stock. All right, so next, it basically means that if you click on this order once button, this thing on the top right corner would show up, and it shows, all right, the following replenishment order has been generated. MO, so it's a manufacturing order. What I just said is noted here. Anyway, we just triggered this thing, manufacturing order, to produce something that's ready for sewing. This number is automatically generated. 62. Can I see it? Anyway, waiting. So, and it's advisable to edit the source. This source, yeah, you don't want to be confused later when you see a number like this. Look at this. I look at this and I know exactly what each of these MO is about. Looking at this system generated number would confuse me. So next. This is the manufacturing order itself, and again, make sure you edit the source like this with the word sewing at the end, so you know what it's all about. It is to produce something that's ready for sewing, some work in progress as the output, and components location, WH stock, is not where material is located. This is inconvenience, and we have to get around that by this: edit the list of input in the components tab, the quantity to consume, and the components location line by line to match the reality on the ground. So you go like that. See, you can put material location in here. That's how the system is at the moment. It's that convenient. It's that inconvenient. And basically that was it for the preparation. You already set up all the manufacturing orders and subcontracting orders for 3936 units in total. Now it's time to go along day by day and execute our story. So I'll show you. The first thing in real life that happened is cutting the fabric to produce work in progress ready for sewing. And here you go. This is the MO created as the last part of the last step of the preparation steps. See this MO, and you want to edit the bill of material to make sure it matches reality. There's going to be a pop-up window asking you, are you sure you're modifying the bill of material on the ground compared to the one automatically retrieved from the system? Just confirm it. All right. Now, request for quotation from the vendor cutting team. So here's the thing, guy. In this company, we don't compensate workers based on hourly wage. All right, it's not a time-based system of salary, but rather an output-based system of salary. So we are paying these people by how many output they do. So here he performed his job. The cutting team in total, just treat the whole team, not each individual, to simplify things. And the unit price here is a budget price for the whole team. Salary adjustments would be made later to reflect what really was salary to be paid to the team. But anyway, to make things smooth, to be on track with real-time data and unit cost calculation in manufacturing, you want to put a budgeted unit price right here for the whole team. And this is the quantity for the whole table. There you go. And again, remember this one, this description. Make sure you have that word sewing in terms and condition. Also, there's going to be landed cost matching. So writing notes like this help make life easy. And here you go. Request for quotation. So you would manually create this vendor bill, all right, from a purchase order up here, PO233. This is not automatically generated from the system. You want to create a PO and then a vendor bill to this so-called vendor and use landed cost, and again have such matching description to make life easier later on. Its landed cost is 6237. Here you go. Let's see what happens next. That is it. You want to match this vendor bill to this manufacturing order number 164. Which is this one. So, okay, this is request for quotation, and then you have the vendor bill is all, and then it's going to be matched to that one, and here you go. And you can read my notes here. Life could be made easier, could be made trickier by having several line items on the same landed cost PO, and then separate vendor bill associated with each line item. Alright, so don't use too many line items in this vendor bill, alright? Make sure it's a one-to-one relationship to which manufacturing order you're talking about. That's what it's about. Next. So the story is we need to provide the subcontracting sewer with all of the work in progress ready for sewing, as well as the related accessories used in sewing so that she can do her job. And so these goes from our accessory location. This one goes from stock. Fair enough. It was just created. It went here, so it goes from here. Stock. Now, you don't typically send these to the subcontractor all together in one day, all right? So for example, on this day, the 1st of April, you're only sending work in progress, ready for sewing. That's something that you just created by cutting the fabric yourself. You may not have all of these in stock to send to her, and you may send it later, a few days later. So make sure you create back order to follow up on these items later. That is it. Resupply subcontractor on order, and then on the transfer overview, what you have is this original out picking was done and a new out picking 703 was automatically created, and it automatically inherits the nodes. This one, 2022 0104 3728, the nodes from the original out picking. So you see, it is why having the nodes written in our own way is very important. You see exactly straight away this is a back order from this one by a simple filter 3728. That is the table number. Next. Yeah, it will come time when we actually need to provide these accessories to the sewer, and be careful with the default location. See, this one should go from accessory. So keep that in mind. Next. We were just talking about resupplying the sewer. Now it's time to keep track of what the sewer has done and has provided us with the output. And this is the overview of purchase order, all right? First one, the cutting team is all done. We purchased and they delivered the whole quantity. But this guy, they would deliver quantities to us piecemeal. And again, terms and conditions, that's where you put the notes so that you can quickly see things the way you want. It's very important to have the notes in our own way. Next. So you want to go in here, open this one. This is the in picking that was created during preparation, and you want to receive only 350 units out of this total. So on this date, the sewer only finished doing this many products, and you can read the notes here. You want to create a back order, and as we all know that the work in progress ready for finishing received from the sewer is going to go to this location. We want to put it here straight away. Okay, right in this using detailed operation. Next. Yep, so what happens is as long as we receive some output from the sewer, we incur accounts payable, trade payable with this subcontractor. And this is the vendor bill that you can create directly from the purchase order 232 account. All right. The notes. Next, let's say some days later, the finishing team finished finishing and packaging and quality checking altogether some quantities of this product related to this table. Yep, see, notes taking like this, you can quickly see what you want to look for. Source consistently using the way, okay? And just like cutting, for finishing is our internal team doing the job. There's going to be landed cost matching later on. So keep going. Here you go, manufacturing order. They only finished 150 units of the total quantity at the beginning. One thing to pay attention to is if you click check availability, the first line item work in progress for finishing is reserved, but the other ones are still in the status of available but not reserved. And the explanation is here. They're available but in a slightly different location. It's the same warehouse, but they are available in this location accessory. And you want to consume them where? In this location that is not editable. Alright, so this is about data entry inconvenience of this system for now, and I just explained to you. So how do we get around that? Int is for internal transfer. You want to move things manually from the location where you have the stock available to where you want to consume it. There, my note tells it, and remember the note. In this internal transfer document, put a note like this so that you can keep track of things later on. Yes, next. Now you can validate the quantity that was received into finished goods inventory and make sure you create a back order. And again, landed cost. The two screens here are all related to purchase order 234. Here you are at the stage of creating a vendor bill, see 6237 outside services, and you got the notes. Here you are at the stage where you create landed cost and you match it to this manufacturing order 163001. That was the MO 163 related to 150 units. Okay. There's a very interesting note over here. As you can see, I am creating vendor bills every time I receive output from any production centers, subcontractors, or no, I'm talking about manufacturing orders from internal team. So they finished doing 150 units. I create a purchase order for 150 units, and then I go with this normal process until I match landed cost. I don't create from the beginning a big purchase order for the total quantity of 3936 and then, match it by piecemeal, because unlike storable products, services cannot be received in gradual quantity over time. So that's the explanation. You can read it. So yeah, long story short, every time you receive output from manufacturing order, create a vendor bill and match landed cost to that team. This time is a finishing team. So that's how you go about executing your production after preparation. There's one thing I want to highlight here, that is journal items. All right, let's go further into how the accounting works when we just enter data the way we did in execution. So the first stage of cutting fabric to produce work in progress ready for sewing. When you do a manufacturing order like that, this manufacturing order, in terms of inventory moves, two things happen. This input for production, the fabric, goes from where it is, material location, to virtual locations production. Think of this as the black hole of the universe. It evaporates, is consumed, is gone. Another thing happened. This inventory move, that is the output from this production stage, this one, work in progress ready for sewing, appeared out of nowhere from the black hole of the universe and it goes into stock. That's in terms of inventory move. In terms of accounting, each of these inventory move has accounting journal implications. The first one, consuming fabric, you credit 152 valuation account and asset account material, and you move that amount of money to 1541, which is work in progress. You can see it down here, the first two line inventory valuations. You see 90.5 million VND of raw material was credited, which means reduced. For asset, if it's credited, it's reduced. And 1541, which is just an intermediary account, it could be called work in progress, but here it's called construction contracts, doesn't matter, it's debited. Okay, so that's the first inventory move. For the second inventory move, creating the output, you got these two lines right here. You credit 1541 and you debit 90.5 million VND for this one, for this product. Now, looking at this, I know what you are thinking. You are saying the first line and the second line make sense. You are crediting, you're reducing raw material fabric here, the product. it says here fabric, and you are debiting value 90.5 million for this output. But the two lines in between don't really seem to make sense. In terms of debit and credit, they do cancel each other, but in terms of matching to the product code, they don't really match. You are debiting 90.5 million of fabric and you are crediting 90.5 million of work in progress. Although in terms of accounting account 1541, the money does offset each other, but in terms of product codes, they don't really match. And the answer is that doesn't really matter. We are only looking at 152 as our main asset account for raw material, work in progress, etc. And so this one is just an intermediary account. As long as the money offset each other, it's all right. The product doesn't really match, well, we can tolerate that. So that's how this system is organized. That was cutting. Next, remember we have to pay the cutting team, right? We got requests for quotation, purchase order, but it is this vendor bill that has accounting journal implication. And this is it, 6237 outside services, cut fee 1.4 million, and payables to staff 3341 salary payable. I say it here, vendor bill and landed cost from the vendor bill. So this is all about matching landed cost. You see 6237 is credited down here and debited up here, so they cancel each other out. This is about cut fee. This is about what? A product code. So similar story. It doesn't really match in terms of product code, but it doesn't really matter. What matters is our focus on 152, this asset account, and is up by 1.4 million, which is what we have to pay this guy. So this value will go into this work in progress ready for sewing. The beauty of this is all this is automatically generated. So next. That was the cutting team. Now let's talk about a real vendor, the subcontractor responsible for sewing this partner. And then notice, take a look at the inventory move down here. Yeah. Only the ones that, so she's consuming these things, right? Accessories used in sewing and this work in progress ready for sewing. She sent them to this black hole virtual location whatsoever. And only these, the one that goes into the black hole, incurs accounting journals entries. See, I say it here. This one, this movement, it doesn't have any accounting entries associated with it. So keep that in mind, right? All these line items have something in common. That is this reference number 73001. And you see it on the next page. Up here is the vendor bill, and you got trade payable to the vendor. Yep, a real vendor bill with maybe even tax invoice number on it if necessary. And 1541. This is an intermediary account only. So let's go. Here, you see that journal entries related to the vendor bill again down here. But up here, what you see is the journal entries related to WH SBC 73, which is this reference number. So here you can see journal entries related to the consumption of these inputs. Now, let's see. You can read my notes, take your time, but here's how to think about it. The work in progress, 12,400,000. This, add this, add this, add this, add this, and not yet. You go down here and you add it to 4.7 million. You will get to this total 18 million. So the consumption of all of these input accessories as well as the work in progress together with the value created by this vendor bill for subcontracting service landed cost would give you a total of 18 million. So the overview up here can be misleading, all right? You might think 12 million plus what, 500, 100, 32, 63. Would that make it to 18 million? No, you have to add 4.7 million here too. Each of these line item has a journal entry like this. I'll show you on the next page. For example, 12,400,000. That is credit 152 and debit the intermediary account 1541. That was the first 12 million. Similarly for the second one, 500. You see down here, you credit, so it means you reduce your assets in terms of that product code. You're basically consuming it and you move it to an intermediary account right here for that value. And under the same principle, 1541 was created from the vendor bill for landed cost. See, the intermediary account 1541 with 4,700,000 was created. At the same time, accounts payable to this vendor was credited automatically. So that's beautiful. There you can read my note. This is to show you the illustration. The first one up here is about the journal entries related to the work in progress ready for sewing. The second one is about accessories used for sewing. And the last one is about the vendor bill related to the sewing service landed cost. Next. So now that we see what's going on here, right? We are creating value for 1541. We are debiting this intermediary account. And that means we have been talking about this, except for the last one. We also talked about this one, debiting 1541. Now it's time to take a look at this very last line item right here, 18 million. Let's see what journal entries is related to it, to the stock move. And here you go. You can read the note. Essentially, it is down here. I have the screen up here for you to reference. Anyway, down here you can see all of the value of 1541 created so far is credited, and instead we move all these 18 million to a new product created, that is this one, work in progress ready for finishing. And again, as before, I know that you guys may be asking me, hey, we appreciate the fact that we moved 18 million value to the newly created output, but this 18 million credited doesn't seem 100% right. Well, yes, in terms of money, 18 million was debited in total to 1541 debit, and then is credited in terms of money is all good. But look, this one is matched to this created output, while for crediting purposes, but for debiting purposes, it goes everywhere. This one, the first one, you debit it to, the work in progress for sewing. This one, you debit it to an accessory. And this one, only this one you debit it to the same product code, finishing with here, you credit it to finishing. So how come up here you can't have the right product code so that it matches? How come we could only have money, total money amount to match each other, but the product code doesn't match? Well, that's what it is, all right? The system is set up that way. Keep in mind, 1541 is just an intermediary account. What we care about, our focus is 152. This is our asset account, right? So let's keep moving. Next, we have the final stage of production, that is finishing. And here's how you want to look at this screen right here. All the way here, except for the last two lines, are about consuming material and work in progress for finishing. So you see, we are reducing or crediting the input that we have, that is 152, and at the same time we are moving all this value of whatever we consumed to an intermediary account 1541. So you have 5,022,1,200 and 5,100. All these numbers add up would give you this number 1076,701. So put it this way, you're moving value to 1541, and then at the end, after you debiting all these total amounts, you credit that 1541 and you move all that value to a new account 1551, finished goods inventory. It's straightforward, isn't it? Except for the same thing that we talked about, product code might not match when it comes to 1541. For example, here you got one product code, work in progress, and then accessory, and then another accessory, another accessory. You're debiting all these values to different product codes, but here you are crediting 1541 to what? The final products, the finished products ready for sales. And then you debit 1551 finished products. So same story again for 1541. We are not so rigid when it comes to matching money to product codes. What matters is before 152 was the focus. Now at the last step, 1551 finished goods inventory is the focus, and we created this value by moving values around. All right, next. This is a similar story to what we saw before with cutting, except that this is about the final stage, producing the finished product for sales. The vendor bill from the purchase order to the finishing team is the one that has accounting implications. You credit trade payable to this so-called partner finishing team. So you know for the whole team you have to pay them this much, just a budgeted amount, never mind. And in terms of products, you incurred this much money as 6237 outside services, yeah, landed cost, and then landed cost matching would give you this. You debit 1551, so you add more value to the finished goods inventory and you credit whatever you just debited before for 6237 by matching landed cost. Yeah, this is product code and this is service code. Doesn't really match in terms of products and service code, but it doesn't matter. It's just 6237, just like 1541 is just an intermediary account.